right, our first story of the day is going to be about Mike Novogratz. Now, for those of you who have not seen Bitcoin, please go to Moon. Mike Novogratz is the Galaxy Digital founder and CEO. And he was in Miami this Wednesday, speaking at a conference in which he delivered a speech where he detailed his views on the next wave of Bitcoin adoption and how it's going to be fueled by interest, not from retail, but from registered investment advisors, like himself. Now, the presentation was delivered at the Context Summits. This is an event. It's a 2-day crypto networking event. It was sponsored by the likes of Galaxy Digital themselves, but also by Fidelity Digital Assets, Grayscale, TD Ameritrade, Morgan Stanley, and several other investment banking players. Now, the goal of this conference was to bring together qualified investors, hedge funds, endowments, and foundation allocators, the big players in the investment space. Now, according to Novogratz's speech at this conference, he claimed that less than 5% of endowment funds have invested in Bitcoin, and that pension funds will be slow at moving into the alternative asset. Now, in order to tip the financial scales in Bitcoin's favor, and to unlock its full potential as the world's real digital gold, Novogratz said the industry will need to invest in a more robust infrastructure, among other things. Now, elaborating on this is Galaxy Digital's new report entitled Digital Diversification, Bitcoin's Role in the Modern Portfolio, which you guys can download over on Galaxy Fund Management's website. Just go to galaxyfundmanagement.com. Here is the report right here, Bitcoin's Role in the Modern Portfolio. And according to this report, Bitcoin is set to shine amidst a backdrop of global uncertainty, more quantitative easing, more debt, shifting trades, tariff and tax policies, swelling central bank balance sheets, and the diminishing purchasing power of national currencies by their citizens. Quote, Bitcoin's total market cap continues to grow, but still has tremendous room to expand compared to other global markets. Billions of dollars of infrastructure investments have been made in the last few years to support Bitcoin's robust ecosystem and enable institutional investors to have the tools and opportunity to invest, trade, and instantly transact with billions of dollars in daily liquidity. Now, progress on this front includes regulated custody, physically settled futures contracts, and regulated options contracts. Now, from Goldman Sachs to Fidelity to IBM to the New York Stock Exchange and Intercontinental Exchange, major financial institutions have made and continue to make sizable investments in the industry and the verticals of Bitcoin's value chain. Now, this report concludes that 2020 will be the year that Bitcoin sees the deployment of even more on-ramps and infrastructure for institutional investors, as well as retail consumers, increasing their interest and use of Bitcoin for payments and cross-border transactions. Quote, more and more people are discovering and investing in Bitcoin every day. Open to all, Bitcoin's ability to settle immense value across borders 24/7 is unprecedented in the history of money. Bitcoin is the world's first global asset that harnesses the power of computers and humankind's innate need to innovate to enable a worldwide decentralized store of value. 2020 is highly likely to see further increases in Bitcoin adoption, innovation, and interests. Now, for years, we have heard that institutions are coming to pump our bags. So we have to ask, with all of the investments that have been made into Bitcoin over the last few years, following the bull run of 2017, is 2020, is this the decade where this finally happens? Because this has been the narrative that has led many astray over the last 2 years as the market has done nothing but decline. You have to ask yourself, is big finance interested in building on Bitcoin and offering value-added services and investment opportunities to their clienteles on the back of the Bitcoin network? Now, we've covered on this show how retail banking wants to get into the crypto space by offering custodial services. From the recent Hawaii legislation to Germany floating a similar bill to the backed warehouse and their coming backed app to the Royal Bank of Canada's own study revealing banks are interested in catering to the crypto-minded next generation of customers. Or do you believe that Bitcoin is too much of a wild card for big corporate institutions? Are they going to give the industry the cold shoulder in order to pursue corporate coin projects such as Libra? Or will more regulatory friendly and state-sponsored central bank digital currencies be where the institutional interest flows? The last time I checked, Libra did not stand a very good investment opportunity to me. Stablecoins aren't fantastic investments. So, in measuring the upside downside of these three scenarios, the answer to me is clear. But please, this is a complicated topic. Please leave your comments in the section down below. I would love to hear what you guys think about this.